Financial wellness. Reach out to them for advice at 855-DON-GINO. And now back to your hosts, Don Getling and Gino Franti.
Well, you've entered the second half. No, it's not of the Super Bowl. Oh, I'm not
The
even supposed to.
big game.
The big game.
Get it right.
Game. And so the big game coming up next week.
Next week, that's right.
So
Super
today's
excited
just
about
the big
that.
show. And you're in the second half of it. We love the second half of it. So if you just tuned into the Don and Gino Real Estate and Finance Show, been with you now for almost 6 years right here on AM 1220 KHTS. You can find out more by going to donandgino.com or hometownstation.com. All the podcasts are there. We actually have our own podcast now and on iTunes with the National Real Estate Cafe. Explain what that is.
Yeah, so we used to do the Word on Wealth, which is kind of discussion of the things that we're touching on today, right? Today we're talking a little bit more of what we normally do in the Word on Wealth, or what we break down into very small segments on the National Real Estate Cafe, where we take all this information and cram it into 2 to 3 minutes so that make sure that every single day you have an update of what's going on. A real update, not something that's got a political spin to it. We don't care. I don't care who's in power. I'm just going to tell you how it is and what it's affecting real estate.
None of this is affecting our pocketbooks.
Yeah.
Well, we keep waiting.
Well, I mean, it's super interesting what's going to happen now. I mean, this, and we're coming up with something. One of the things that we're working on is we're coming up with our own content for you on the National Real Estate Cafe, so that we're not just taking reports from others. We're starting to analyze certain things. Like, everybody's making a huge deal out of this mortgage insurance thing.
Right.
Right. Well, mortgage insurance has changed, I don't know, 5, 6, 7 times in the last 4 years. Well, nobody cared.
Right.
It was like a quick
Well,
email.
they did when it went up.
Yeah, it went up significantly
A lot.
at sometimes.
It got very expensive, actually.
Got very, very expensive. So
explain
think about
what
that.
mortgage insurance is. Why would it go? Why would it change?
I was just about to go into that.
Thank you, Gino.
Yeah. So what happens is the federal government has created a program, a Federal Housing Administration. I don't remember which president did this many, many years ago. And the reason they did it was to support the mortgage market to ensure that everybody could get financing to buy homes, right? It's the American dream. So if, let's say, an institution like Skyline or B of A or anybody that you go to, they're lending their own money when they lend you FHA loans. But they're insured by the federal government that if you default on this loan, they will receive up to a 25% reimbursement of your losses. So 25% of the equity of the home, that's a huge number. So the reason they lend at 96.5%, up to 96.5% of the value, is in reality for the bank, they're not really taking that risk. They're not really doing an almost 100% financed loan. They're really doing a loan at under 80% loan to value,
Right.
because they're insured on any losses up to that amount. So it's almost the same as them doing a conventional loan for you. So that's the FHA. So why do they have to vary the MIP, the mortgage insurance premium? As market conditions change, defaults change, the cost to operate this business, let's call it, division of the government varies. And as that cost,
risk varies.
And risk varies. So as risk varies, cost varies. And as cost varies, they try to pass that on in a fair manner to its borrowers.
Right.
And so what the Trump administration has said is that we're not so sure that right now is the time to be lowering mortgage insurance premiums
Any further than they have. They've lowered it already once because it went up high because everybody knows
The defaults were
defaults
crazy.
were crazy, and therefore they had to collect more money to help offset that cost. And then since the economy's improved,
we want to make sure that the Federal Housing Administration has enough reserves to pay out on those claims. Think of it as an insurance company. It's basically a government-funded insurance company. So if they're guaranteeing those loans, they need to have enough reserves to pay on those loans should they default. So based on the default rate, their reserves also vary. So really, this is a function of reserve management is what the MI does. So the administration says, I realize the last administration changed this, but we want to do our own analysis before we make a change.
Yeah, so there was a huge announcement about mortgage insurance being lowered right before basically the inauguration day. And just about as soon as it was announced, and everybody got excited about how low mortgage insurance. And believe it or not, let me clarify one thing more about mortgage insurance. You're going to hear that mortgage insurance is a bad thing. Oh, it's got mortgage insurance. Oh, it's horrible.
Oh, it's not tax deductible.
Yeah, you realize back in the day, one, it was hard to get a loan at all to get a house. And then even when you had more, affluent lenders out there, or banks that were willing to go up to 80% of the value, I mean, you had to at least have 20% down. Actually, it was 50, and then it became 20. With mortgage insurance involved, because there's an insurance policy on the money that you put down, basically, on the home, or the loan they give you, they allow you to basically go as low as 0 down for a VA loan, another government-insured loan, or 3.5% down on an FHA loan. Without mortgage insurance, you don't get that. You have to come up with 20%.
There's private mortgage insurance for conventional financing too, and there's companies like Radian and MGIC and things like that also add liquidity to the mortgage market. Because you're right, if you look at jumbo loans, right, which is a less insured mortgage insured market, right? There's still some mortgage insurance for jumbo, but let's pretend it doesn't have mortgage insurance for jumbo. Most lenders don't want to go over 70%. Some will go to 80, no problem, but really none of them want to cross that 80 barrier and go to 90.
They want that 20% equity position to reduce their risk.
Right. So the only way they do that is some banks offer seconds or home equity lines of credit to go a little higher and not charge for mortgage insurance, but those get pooled into a different risk class, and you always pay a higher interest rate for those.
All right. Did you realize that you were entering into a mortgage insurance seminar?
I bet you didn't, but you know more about mortgage insurance now than you ever wanted to.
But it's something that's imperative. If you have a home or want to purchase a home, or your child's going to purchase a home, or your grandchild's going to purchase a home, mortgage insurance isn't all bad. It's a way it's enabled a lot of us to get into homes a lot earlier and leverage our money.
Okay, so I get to tell my real life example now. Right. So my real life example is I did purchase a home using FHA. And it cost me approximately $6,000 the first year. Okay, about close to $500 a month. So it cost me $6,000 in mortgage insurance. Plus, if I really wanted to do the numbers correctly, it probably cost me another $12,000 because I had the upfront mortgage insurance premium. So let's just say it cost $20,000 to utilize this program. However, my home appreciated over $50,000 in the same year. So I profited $30,000 by using this tool. And I got to be in my home for a year earlier. Right. And I got to, have better quality of life and all those good things about home ownership. But it still turned out to be a profitable venture. It still turned out to be a good investment. So sometimes you have to look at mortgage insurance in an appreciating market as a good investment into your future.
Well, they always say that real estate's the best investment over time, creates more wealth, and remember that homeowners have a 46 times greater net worth than a renter. Not picking on you renters. We've been renters. We get it. But there's nothing like home ownership, and it's a great way for you to invest in your future. It's the best savings account there is.
Right. And so, some people are fearful of buying a home. And granted, it's a big commitment, right?
Good word for it.
It's a big commitment, and it's something that you commit to for a long time. But it's very... and it's nice coming out of this last cycle that you see that people that lost their homes, they want to jump right back in. You want to get back into a home as soon as possible. At least 2 years later. You rent for a little while, and you're like, I don't like this. I want to go own my own home again. I mean, like right away.
Well, when you lose your home, it's painful, but you do forget that pain. It's like why women still have babies. I guarantee the day they have the baby, they're like, I'll never do that again.
Right. And then they get amnesia, right?
Yeah, exactly. Like me in motocross. 35 broken bones later. Why do you get back on that bike?
Because it's fun.
It's fun. I forgot the pain.
Yeah, or like the last couple of weeks. Don and I were lucky enough to participate in a race together, and we were the underdog, and we pulled it out.
We're the Beverly Hillbillies.
Totally the Beverly Hillbillies.
Shopping
right?
jeans, and these guys got sponsors.
We were sharing jackets, sharing helmets. And
neck braces.
These guys are all dressed up in their racing suits and their carts that are all fancy and dialed in. Ours all hodgepodge together. And
we made our own circles.
That's right.
Backgrounds.
We did. So, and overall moral of the story is we worked well as a team. We were super consistent, and we didn't make any mistakes, and we came in second place.
Yeah, so it was awesome. Out of 14 teams, we got third overall and second in our class. So,
so that was a lot of fun.
It was a good time.
But anyways, that was a discussion on amnesia because my wife heard me about complaining the whole week about how much work the cart was and how I stayed up till 2 o'clock in the morning working on the cart, and I was tired. And she goes, oh, so that's cool. You're done. You guys had fun. You're just not going to do it again. I'm like, no, there's another race in 3 months.
She goes, you already got amnesia.
Yeah, exactly.
Okay, so we're heading into the final stretch of the Don and Gino Real Estate and Finance Show. Again, you can find out more by going to donandgino.com. There's great information there. We also have the National Real Estate Cafe, which is nrecafe.com. Which is also now, we have a podcast, the whole 9 yards. It's set up for you to learn every single day. The podcast is great because they're only 2 to 3 minutes and giving you today. For example, we sent out the FHA reduction.
We had to take that back.
2 days later, we sent denied.
Right.
But if you paid attention, at least you'd be in the know. All right, we're going to make sure we close this out with keeping you in the know. We're going to let you know what's really happening with the housing market today and how it affects you right here in Santa Clarita, because there are ways to be more successful than not. And we know those tricks because we help a lot of you out with that every single day right here at Skyline Home Loans and the Don and Gino Real Estate Finance Show. Don't go away. You'll be sorry if you do.